Hey everyone, Couch Investor back on our video for today. So despite the Nasdaq, the Dow, the S&P 500 being green today, Microsoft, Amazon, and Shopify, among others, were down between 1.2 to 2.6%. So what exactly has happened? Did we have news specific to one company? Is it the industry, the Fed? What exactly has happened there? Well, yes, we did have news specifically towards Amazon, Microsoft, and maybe Shopify is just because it's Shopify and Amazon. So if one thing happens with one, then the other just comes along. Could be. Now remember, I want to mention something. Last week, we had obviously some red days because of, uncertainty in the banking industry. But during those days, big tech companies actually performed quite well. So maybe this week, who knows, we'll also have the Fed meeting, rate hike, cut, pause, remains to be seen. But because last week, as you can see here, right, Amazon, Microsoft, they've outperformed in the last 5 trading days the Nasdaq. Now, it could be that people used Amazon and Microsoft, Google, Apple, Tesla as well actually, as some type of safe haven during those uncertain days. Could be because if you look at smaller companies, they did not go green during those red days, whereas the big ones, they did. So maybe a lot of money did flow into the more certain companies, big tech companies. It could be one of the reasons. And today, I don't know, Amazon, layoffs, tech jitters, still high interest rates, then that might be the reason why suddenly you see one day where those companies are red when the overall market is green. Can happen. Now, before I jump into news specific related to Microsoft, which is actually, in my opinion, good news, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So with regards to Microsoft, of course, Microsoft, when we talk about Microsoft, you always have to think about the acquisition Blizzard deal, which right now, we still don't know what might happen. But we've got some news with regards to the gaming department here. So Microsoft plans mobile games app store to rival Apple and Google. Now, how will this happen? Well, apparently in March 2024, under the EU's Digital Market Act, some things will change with regards to Apple and Google. So they will have to open up their mobile platforms to app stores owned and operated by other companies, which could be a real game changer. Now, some comments here by Chief Executive of Microsoft Gaming. He says, "We want to be in a position to offer Xbox and content from both us and our third-party partners across any screen where somebody would want to play." And again, third-party partners here is very, very important because they are still trying to convince regulators that, please approve the deal to acquire Activision Blizzard. We're not going to make all of Activision Blizzard's games exclusive just to the Xbox Pass. Not going to happen. And in my opinion, I don't think it's a good way to move forward anyways, right? So again, trying to appeal to regulators here a little bit. They continue by saying here, today we can't do that on mobile devices, but we want to build towards a world that we think will be coming where those devices are opened up. I'm sure the likes of Tim Sweeney of Epic Games and maybe even Zuck would love to see this duopoly broken up. We also had a price target raised at Evercore ISI from $280 to $295. And of course, I'd like to add that for Microsoft, this Activision deal is actually very important when it comes to the mobile scene. Because right now, Microsoft doesn't really have mobile games. Activision, on the other hand, Candy Crush, Diablo, Call of Duty, it has big games on mobile. So to Microsoft, this deal is very, very important. Not just for the consoles, but for mobile as well. Now, with regards to the stock, quick look here at the chart. Of course, as I said last week, big green candle here. Then today we're starting the week a bit red-ish, but overall still pretty healthy in my opinion. We're still well above the 200-day moving average. MACD is still bullish, RSI not oversold, so we're all fine there. Then with regards to Amazon, I'll start with the chart first. Again, with Amazon, I think investor sentiment is very, very low. We're still nowhere near the 200-day moving average, but we did stay today above the 20 and the 50-day moving average, which, okay, is good for me. The weekly candle last week is also a good green one. RSI still neutral, MACD still bullish, but we're still under the zero right here. Pretty boring chart if you ask me, but good for people that want to accumulate shares of an amazing company. And then now, of course, the major news that came out during the day, and probably the reason why the stock was down, is, well, because Andy Jassy put out a letter to the Amazon employees. So he says here, we've just concluded the second phase of our operating plan this past week. I'm writing to share that we intend to eliminate about 9,000 more positions in the next few weeks, mostly in AWS, PXT, that's the technology department, their investments, aka the bets, advertising, and Twitch. This was a difficult decision, but one that we think is best for the company long term. And this is, by the way, on top of the 18,000 positions which they announced back in January that were going to be eliminated. And they say here, as we completed the second stage of our planning this month, it led us to this additional 9,000 role reduction, though you will see limited hiring in some of our businesses in strategic areas where we've prioritized allocating more resources. Now, I'm sure some people will already have noticed AWS and advertising is part of the job cuts there. Well, some people will lose their jobs in those departments. So you might say, is this bad for the business? Does this mean that they are seeing internally that growth is slowing down? On the one side, yes, probably that's one of the reasons. And then on the other side, maybe they have seen themselves, look, we don't really need that many people to actually continue to grow. We can actually do more with less. I think it's a bit of both. And now with regards to Shopify. So Shopify, since the end of January, has actually come down all the way back under the 20 and the 50-day moving average. Now we're sitting right above both of them. So again, remains to be seen, can we go back over the 200-day moving average? That would be actually pretty bullish. Right now, it does seem that in the last 2 weeks we have tried, but have failed. RSI still neutral, MACD still bullish and above the zero line here, so we're good. But let's try and finish this week maybe above the 20 and the 50-day, a bit closer to the 200. I don't think we're going to try and go over that this week, but maybe in the coming weeks we might. Of course, expect some volatility when the Fed will announce their next moves. Now I'll start with some analyst coverage here. So it has been resumed with a hold at Stifel or Stifel, correct me in the comments down below. So they have resumed coverage of Shopify with a hold rating and a $45 price target. The analyst believes Shopify sits in front of a sizable market opportunity in the e-commerce space, driven by a combination of new merchant acquisition and numerous customer expansion paths. However, the investments the company is making to expand its platform capabilities are pressuring gross margins and driving increased spending in the near term, which is weighing on its ability to drive meaningful profitability and free cash flow in 2023 and 2024. Now, with regards to those investments, of course, a big investment is the Shopify fulfillment network. So they acquired Deliverr last year. Now they give us some more information in a conference last week. So they say here that Shopify integration with Deliverr will build a more elastic warehouse capacity. They say that it's going to be more flexible than that of Amazon. Now with Deliverr, Shopify can offer its merchant fulfillment capabilities while remaining asset light by using software and working with a network of partners that include warehouses, carriers, and last mile delivery providers, according to the report. This enables the firm to avoid the fixed cost and access capacity that Amazon found itself burdened with when it ramped up its fulfillment capabilities during the pandemic and then encountered a slowdown in demand. Some of the technology we got from Deliverr allows us to do this in a distributed way and then tackle some of the things which Amazon and others. They also mentioned during that conference that this business, the Deliverr business, will be making money on its own and it won't just be a cost of doing business type of segment. They also did comment on the price hikes that they made with regards to the various subscription plans. So they said here that there was virtually no pushback from the merchant on price hikes. The price hikes were the results of benchmarking versus all the available competition and seeing room to raise while still being by far the best value out there. And it's actually considering hiking Shopify Plus pricing, but is not ready to do so right now. And now with regards to AI, ChatGPT, of course, Shopify came out with their own little thing here. Well, not their own, they're working with ChatGPT. So basically a Copilot, a shopping Copilot, they call it. What can you do here? What are you shopping for today? So you can write whatever you're looking for and they will basically provide you with the items. So let's try it out. So I basically asked it, I'm looking for some fancy pants. It answered, sure thing, are you looking for men's or women's? Said men. What's the occasion? Are you looking for something formal or casual? Said casual. And then it gave me here 3 options. I can show similar, add to favorites. It already shows me the price, who's selling it. If I want, I can go and buy that thing like that. This again shows you the pace of innovation at Shopify. Something new comes out, pops up, could help their sellers, could also help the buyers, of course. It's integrated like this. Pretty helpful for shoppers, of course, that don't really know where to shop. You go on there, you look. It's also great for discovery, by the way, because now it gives you clothes, items from various stores, so those get discovered in a new way. Again, great addition to the whole Shopify ecosystem. So overall, I hope this video was helpful. Now you know why these companies were down when the market was actually green. Nothing that really should worry any long-term investor. On the contrary, it's actually more positive than negative in this case. Of course, laying off 9,000 people is never nice to hear, but for a company like Amazon, these were just the necessary steps. Maybe we'll see some other big tech companies follow suit, remains to be seen. But if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.